Joined in studio by Duma Gqubule. He's the founding director at the Center for Economic Development and Transformation. Thanks so much for your time on SABC News this afternoon. First, let's talk about what type of a sovereign wealth fund South Africa could have, because there's more than just one type.
Yes, broadly there's two types of sovereign wealth funds. There's the one that you see in China. So that's related to the accumulation of foreign exchange reserves to keep your currency low. So what happens is that China fixed its currency in the late 90s at 8.28 against the dollar. And to make that happen, they had to take all the dollars that were coming into the country and accumulate foreign exchange reserves. So at one point they had $4 trillion of foreign exchange reserves because of the maintaining the currency peg. So the civil society in China said that no, we must do something about these foreign exchange reserves. They're just sitting here and they're doing nothing for the country. So they set up two sovereign wealth funds. One is called China Investment Corporation with a capitalization of $200 billion. And they set up something called SAFE with a capitalization, I think, of $20 billion. So today, China Investment Corporation is the second largest sovereign wealth fund with $950 billion. And SAFE is also got $400 billion. So it has earned returns more than it would have earned just sitting in the central bank accounts here. So in South Africa, we've got 850 billion rands of foreign exchange reserves. So we could theoretically, if we want to set up, do that as well. The second type is relating to getting a fair share of the mineral resources of a country. Now, you should remember that the mineral resources belong to all South Africans. They do not belong to the companies that mine them. So they mine them on behalf of all South Africans. So we should get a return over and above tax revenue from those mineral reserves. So let me just say, people talk about, well, how are you going to afford this? I was checking, there's 17 sovereign wealth funds in Africa. And those countries, all of them are much poorer than us. I'm talking about Botswana, they've got a Pula fund. Namibia's got a sovereign wealth fund. Uganda's got one for their oil reserves and so forth. Ghana's got 3. Nigeria's got 2. Equatorial Guinea. So these are very small countries. Rwanda's got one as well. So these are small countries that have put aside money from their natural resources to be able to set up a sovereign wealth fund for the whole population. The best known one is in Norway, where the government owns 90% of all the oil that comes out of the shelf of the sea. So they take everything and they put it into a sovereign wealth fund, and they've got $1 trillion in that fund, yeah.
I'm glad you brought up costs and the different countries and the affordability. That's been a constant refrain by many economists. Mineral Resources Minister Gwede Mantashe is reported by Fin24 to have said that perhaps the oil and gas fines that South Africa has had recently could possibly fund that sovereign wealth fund. I think the concern is that there are so many other pressing issues that South Africa has to deal with. This feels almost like a vanity project or something that could wait for much later until our country is stabilized.
I agree with you 100%. So the issue is we need a package of measures, monetary and fiscal policy to kickstart this economy. And the sovereign wealth fund is not one of them. But there is no harm in setting up the institutional framework so that we can benefit more from our natural resources. During the last boom, South Africans didn't really benefit from these funds. And there have been a number of interesting things that I've heard. They said that you could have a super tax on these companies when the commodity prices are high, and then release it back into the economy when commodity prices are collapsing. So you could use it to support people who are being retrenched and so forth. So it's just about smoothing the fluctuations of natural resource prices, because they're very volatile. They go up and down. So we need some way to make it smooth in terms of the benefits for the country. There are ways we could fund it. The last time I read, there was supposed to be automatic, what's called a state carry in the natural gas projects. The government can participate in all those natural gas projects, and so they could get free shares. It's called a free carry in other countries. Also in our mining industry, we could have a free shares for the state with the new legislation. So there are very many ways in which we can set up a sovereign wealth fund. I proposed 2 years ago that a portion of royalties should go to the sovereign wealth fund so that it benefits all South Africans and we earn higher returns than we could have get. And then I put forward proposals 2 years ago about how this thing would work. I said that the IDC and this PIC, they already have about 100 billion rands of assets. At the time, it was about 16% of South African mining companies. So they could cede that to a sovereign wealth fund to benefit all South Africans. Now, the reason I'm saying that is that the funding of the PIC, and when they moved from a pay-as-you-go to a fully funded system, it was paid for by all South Africans. And the funds that went into that from general tax revenue was in excess of 200 to 300 billion rands that South Africans paid towards that thing. So I think it should benefit as well all South Africans and not just 2% of the population, which is, yeah.
The concern about the PIC has been raised many times. For instance, when Kwasatsha is proposing that 250 billion rand be used to bail out Eskom, is that that's not the reason that the Public Investment Corporation is there. And so if you keep on finding things that the PIC needs to pay for, perhaps pensions will be at stake and that institution will be watered down a little bit.
Okay, so my personal view is that the funding that's in the PIC, 108% funding, is way in excess of what is required to pay the pensions. And you must remember that the pension deal that the pensioners have with the government is that it doesn't depend on the assets in the PIC. It depends on your percentage of final salary and years of service here.
Okay,
yeah.
So we need to wrap up, but a concern is also that if there was a sovereign wealth fund, how would it be administrated? Because in South Africa, unfortunately, rightly or wrongly, there's a perception around corruption and large sums of money. President Cyril Ramaphosa says between 500 billion rand to a trillion rand has been lost to corruption. If there are such vast amounts in a fund, there's no guarantee that it's going to be safe and used for the reason.
I agree 100%. So I don't actually, those numbers are not true, by the way, but the ones that the president was quoting, they're way in excess of what actually happened to those of us who follow these things. Now, I just want to say we need to start experimenting with stakeholder boards, where we have all the stakeholders in our economy to monitor what is happening. In Ghana, I saw a similar thing for their heritage fund. You get people from the workers, communities that are affected in mining areas, and all stakeholders to participate in the monitoring of this. And I do think that we need to set up some kind of governance framework that is not private sector, that is not state, but something in between, where it's stakeholder-driven monitoring of the fund, yeah.
Duma Gqubule, Founding Director at the Center for Economic Development and Transformation, joining me in studio there to discuss that potential sovereign wealth fund. I'm sure we'll hear more about it when Finance Minister Tito Mboweni delivers his budget on the 26th of February. Nompumelelo, it's over to you.